Imagine you've stepped into a giant maze. That's what navigating government benefit programs can feel like. Twists, turns, rules, deadlines. It's easy to feel stuck, exhausted, and unsure which direction to turn. In Colorado, programs like Medicaid and Supplemental Security Income, or SSI, are lifelines, helping people with disabilities access the supports they rely on to live stable, connected, and empowered lives. But when you're in the benefits maze, it can get tricky. These means-tested programs often have strict resource limits. Many people trying to qualify for or stay eligible for SSI or Medicaid can't have more than $2,000 in their name. What happens when someone goes over that resource limit? They're often advised to spend down quickly, because keeping those funds for future needs could jeopardize their benefits. It's a classic catch-22. You need those benefits to live well, but you can't plan for the future without risking them. For someone with a disability trying to navigate the maze and plan ahead, it feels like running into a brick wall. Families, guardians, and support teams feel it too. They want to help their clients and support their loved ones, now and in the future. But resource rules often slam the door on inheritances, gifts, or long-term planning. That's where a Pooled Supplemental Needs Trust can help. An exit ramp from the maze. A pooled trust can help older Coloradans and Coloradans with disabilities protect their funds and their benefits, so they don't have to choose between their health and their financial security. What is a Supplemental Needs Trust? Also known as a Special Needs Trust or an SNT, a Supplemental Needs Trust is a tool that helps people with disabilities protect eligibility for benefits like SSI and Medicaid while still allowing them to use some funds for quality of life expenses. Here's how it works. Funds are transferred into a pooled trust to be used for the sole benefit of one person, the beneficiary. A trustee, like CFPD, then manages and invests those funds on behalf of the beneficiary. By federal law, the pooled trust administrator must be a nonprofit organization. Once the funds are transferred to the trust, they're irrevocable. They must stay in the trust, but in exchange, they're protected. These funds may now be used over time for allowable expenses. Why is it called a pooled trust? By pooling together funds from many beneficiaries, investment power increases and management costs decrease. And although funds are pooled, each person's balance is separately accounted for. Therefore, each beneficiary has their own sub-account ledger and receives a share of the investment returns. The trust funds are invested at the discretion of the trustee with the help of a partnering investment advisor and are aligned with the beneficiary's needs and goals, whether they need support today or are planning for tomorrow. There are two types of pooled trusts. A first-party SNT, funded with the beneficiary's own money, and a third-party SNT, funded by someone else, like a parent or a family member. An individual trust created for one beneficiary can be more expensive to create and administer, and requires review by the relevant benefit programs, while an established pooled trust has already been approved by Medicaid and Social Security. Joining a pooled trust can mean less paperwork, no long waits for approval, and fewer upfront costs. The trustee is a fiduciary, legally and ethically bound to protect the trust and act only in the beneficiary's best interest. That's peace of mind families can feel. They can breathe easier knowing there's someone dependable to make decisions when they're no longer able to. Having a trusted partner on your side can make all the difference. There are many reasons someone might become over-resourced and need a pooled SNT. A few common examples include an inheritance, a legal settlement, a Social Security back payment, unspent funds from Social Security or other benefits, monetary gifts, wages from a job, and even funds from a GoFundMe or other fundraiser. Instead of rushing to spend it all down, A pooled SNT turns those funds into a pathway to opportunity, a resource that can be used over time to enrich your life without sacrificing crucial services. Funds in an SNT can be used for an incredible range of supplemental needs, expenses that benefits may not cover. Adaptive equipment, medical bills not covered by insurance, travel, transportation, continuing education, hobbies, household items, recreation, and so much more, all while keeping your benefits intact. Allowable expenses will depend on the beneficiary's unique combination of benefits, needs, and life circumstances. Pooled SNTs are quick, affordable, flexible, and ideal for modest sums. The average funding size of a pooled trust is $30,000 to $40,000, and the trust funding minimum at CFPD is $1,500. So if you're stuck in the maze with extra funds that put your benefits at risk, breathe easy. You're not lost. A Pooled Supplemental Needs Trust can help you escape the maze, keep your benefits, protect your future, and help you live your life without financial detours. Pooled SNTs are easy to join, cost-effective, and already approved by Social Security and Medicaid. If you believe a pooled trust might be the right choice for you or a loved one, or if you have any questions about how to use a pooled trust to protect benefits, please get in touch with us. At CFPD, we're here to help Coloradans move forward with confidence, because life's too short to get lost in a financial maze.